Welcome back, accounting boffins. Remember guys, we're doing asset disposal. Once again, a very, very important consideration whenever you are dealing with an asset disposal. It is imperative that you draw up the table. What am I referring to? I'm referring to the table where we calculate our depreciation for our financial year, right? That's the current depreciation, remember? Then you bring in your cost price, your accumulated depreciation. Always remember, it's the beginning of the year figure, right? Plus, add your current pro rata depreciation. That will then give you your carrying value. You then have your selling price, and then you have your profit or loss on sale of asset. So once this table is completed, immediately you know you've got the figures that you need in order to complete either note number 3 or the asset disposal account or whatever is required of you. Okay, let's go right into this question here where we are asked to complete the fixed assets note, and the first one that we can see is we have a missing figure here for the carrying value at the beginning of the financial year for our vehicles. Right, how do we calculate the carrying value? Always remember, cost price minus accumulated depreciation. Let's do that. So here we go. Here's our cost price, 838,000, and we have our accumulated depreciation of 420,000. There's my accumulated depreciation, 420,000. Obviously, if you do the maths, you can see that you have a carrying value at the beginning of the year of 418,000. So once again, important guys, cost price minus accumulated depreciation to give me my carrying value. Okay, the next thing that we needed to calculate there you see we've slotted in your carrying value at the beginning of the year. Okay, now we are expected to work out our depreciation. Right, always keep your calculations for depreciations separate, old and new. Starting with the old, cost price was 838,000. We've dealt with that figure already, we've seen it. It was my balance at the beginning of the year. And what was my rate of depreciation? Let's just check my rate of depreciation for vehicles. Vehicles are depreciated at 15% per annum on cost. Therefore, what we do here is we say, fine, take your 838,000, which is your cost price, times your rate of depreciation. Remember, we always use art. And because we've used this for the entire year, it's old vehicles, immediately we do that calculation, and we find that we have a figure here of 838,000 times the 15%, which will give me, let's do that, times the 15%, which will give me a figure of, nope, definitely something wrong there. Let's redo our calculation. 838,000 times the 15%, okay, and there we go, will give you a figure of 125,700. So that figure was in fact correct. There we go, 125,700. So what have we done? We've calculated our depreciation on the old vehicles. Right, did we acquire a new vehicle? Let's check. Okay guys, let's look at the new vehicle that we've purchased. We said in terms of our information, did we purchase a new vehicle? Yes, we did. How much? 216,000. Okay, now the calculation. In terms of my new vehicle, there we go. A new vehicle was purchased on the 1st of October 2019. Right, okay, in terms of my calculation, here we go. 1st of October, there's my date. Clearly you can see I purchased for 216,000. Therefore, your amount is 216,000. Your rate, which is your R component, is 15%, and your time is 5 months because obviously it was bought on the 1st of October. So October, November, December, January, and February gave you 5 months. Therefore, the 5/12. Okay, let's do that calculation. Here we go. So we say 216,000 times the 15%, which is my rate of depreciation, times 5 divided by 12, and there we go. We get a figure of 13,500. 13,500 is my depreciation on my new vehicle. Now watch this. We've always insisted that you show your calculations so that in the event of you making a mistake, you can always get part marks. Here we go. There you see it. There's my calculation. There's the old, there's the new. And the total, obviously, would be my depreciation. Now I got the 13,500 plus 125,700, and this will then give me 139,200, and that's the figure that I'm looking for. Voila, there's my 139,200 in terms of my total depreciation for my vehicles, right? So, what have we seen that was pertinent for us here? Keep your calculations separate for old and new. Okay, moving on with the question, the next thing that we have to determine here would be the disposal of my equipment. What information do I have? I'm told here that old equipment was sold on the 1st of January for 26,250. A profit of 4,250 was made on this sale. Okay. Now, clearly you can see that when you are working out based on the information that you have, your selling price was 26,250, right? And you are told that you made a profit of 4,250. So clearly, the 22,000 Rand would be your disposal at carrying value. What do we remember? We remember from this year that if my selling price is greater than my carrying value, then I've made a profit. Okay? So in this case here, if my selling price was 26,250 minus my X amount, which is my carrying value, to give me a profit of 4,250. Clearly you can see that your carrying value was 22,000, meaning that your selling price was greater than your carrying value, which resulted in a profit of 4,250. Now, in terms of my information that I have there, you can clearly see now that my disposal is at 22,000. Right? So this gave you, because remember what we said, in note number 3, what do you want for your disposal? You want your disposal at carrying value, meaning cost price minus the accumulated depreciation. Now, if you look at the information that we have here, let's look at how we completed our table with regards to our asset disposal. Number one, they're telling you that let's look at the information that we have here. If you look at equipment, right, watch, you have an opening balance of 622,000. There were no additions, so that means you did not purchase any equipment. Therefore, if you take the 622,000 as your opening balance, right, minus your balance at the end of the year, which is 517,000, which is given to you, you can clearly see it. There we go, 105,000 Rand. What is the 105,000 Rand? The 105,000 Rand will now be your cost price of the asset that you are disposing. Clearly you can see that, right? And how did I do that? By comparing my opening balance with my closing balance. Then, the accumulated depreciation, now let's put in the information that we have here. We know that the carrying value was 22,000, so obviously, if we know that the carrying value was 22,000, sorry, we take the 105,000 minus the 22,000, okay, let's just redo that. We got 105,000 minus the 22,000 to give me a figure of 83,000 Rand. What's the 83,000 Rand? That's your cumulated depreciation of 83,000 Rand. Okay, you also know, in terms of the information given to you, that the selling price of the asset was 26,250. That means you sold the asset for 26,250 in cash. Therefore, because your selling price is greater than your carrying value, you've made a profit on sale of asset of 4,250. Clear, guys? Okay, now, in terms of my note number 3, right? Here we go. We can see that if you were asked to calculate your accumulated depreciation for your vehicles at the end of the year, let's firstly take this figure forward and see how we're going to do our calculations, right? So we start off with our 358,000, which is my carrying value at the beginning of the year. 358,000, there we go. I add my, there was no addition, so there's no figure to add. Let's remove that. Minus your disposal, so therefore, here we go. Let's just get back to our calculator. We got our 358,000 as our carrying value at the beginning of the year, right? Then we subtracted 22,000, which was my disposals at carrying value, minus my depreciation of 35,400, and clearly you can see that gives you a carrying value of 300,600. So there's your 300,600. Once again, what did we do? We took our carrying value at the beginning of the year. There was no additions, so there's nothing to add. You subtracted the carrying value or the disposals at carrying value. Let's put this here so that you remember that the disposals at carrying value, very important for note number 3. Right, so we subtracted our disposals at carrying value and we subtracted our depreciation, the total of 35,400, to give me a carrying value of 300,600. Okay, now let's just do this here and to see if you take your 517,000 minus 300,600 will give you a figure of 216,400. Now, what is the 216,400? The 216,400 is the accumulated depreciation at the end of your financial year. Now, notice what happens here. That if you work out, let's do this calculation here so we can see it. If you take your 517,000 minus 216,400 will give you a figure of 300,600. So if you're working upwards, that's the answer that you're going to get. And if you're working downwards, once again, let's do the calculation to verify the accuracy of our note here. You started off with a 358,000. There was no additions, minus the disposals at carrying value, minus the depreciation for the year, and that gave you a figure of, there's something we did wrong here. Let's just redo this calculation. 358,000, right? We said minus the 22,000 minus your 35,400, and that gave you a figure of 300,600. Clearly you can see that in this particular example, your fixed asset note has to work out, and the check is important to verify whether you actually have the correct figures. Now, obviously, you need to have this information, and although the question didn't ask for it, but what figures would you show in your income statement in terms of depreciation, in terms of your profit on sale of asset or loss on sale of asset? So therefore, When you are doing your income statement, remember what we're going to say. We're going to say that you have a profit on sale of asset of 4,250, right? Obviously, you know where that came from. That came from the profit on the disposal of the equipment. And then your depreciation. Remember, you had two components of depreciation. Let's go back and pick them up. You had the 139,200, which was your depreciation on your vehicles, and you had depreciation on your equipment of 35,400. Therefore, in terms of my income statement or my statement of comprehensive income, there I go. Depreciation, there's the vehicles, there's the equipment. Add the two together and you're going to get your total depreciation that needs to appear in your statement of comprehensive income, also known as the income statement. So in other words, what is important is, depending on what the question asks for, you also need to know this, that when it comes to your income statement, you must show your profit on sale of asset under other incomes. If it's a loss on sale of asset, it needs to appear under operating expenses. Depreciation will always appear under my operating expenses because we know that depreciation is an imputed expense appearing under operating expenses. Okay, guys, let's take a quick break. Let's refresh and we'll see you just now. Thank you, James.